What is going on, NuView audience? This is Alex Sylvia coming to you with another weekly Wednesday workshop. Today, we're covering a relatively popular topic, which is note investing. But with current market trends, we're definitely going to be getting some good, possibly further up-to-date information than we've gotten in the past on note investing, what might be a more advantageous strategy in today's times. But regardless, today's webinar, like I said, it's about note investing from top to bottom. Specifically secured passive income note investing, what successful deals look like. And like I said, in today's market climate, that might be a little bit different than what it was a year ago or even a couple months ago. Now, before we get into the presentation itself and get our guests on, we do have a couple slides to cover beforehand. First off, to any viewers that aren't familiar with NuView or aren't familiar with self-directed IRAs, self-directed IRAs are IRAs, just like any other IRA. The main difference, though, is who the custodian is and what types of assets they allow you to invest in. So self-direction itself, it's actually just a marketing term. The difference, though, lies within the custodian and what assets they allow you to invest in. Now, when you start investing outside of the stock market, you might be able to find some benefits that you wouldn't be able to find investing inside of the stock market. Now, with an IRA, yes, number one, there's tax savings, regardless of whether or not you're invested in alternatives or you're invested in the stock market. Regardless, with an IRA, 401k, HSA, or ESA, you'll never see capital gains tax again. The difference, though, with self-directed IRAs is you get to reach a whole new level of diversification into actual tangible assets in some cases, cash flowing assets like real estate or notes as well, and you could really add some power to that compounding interest. Beyond that, you can also invest in what you know best, which is huge, especially for our real estate investors out there or lenders out there, because they might already have a skill set that they've perfected, mastered, or at least just gotten good at to where they now can, if they want to, apply it in a tax sheltered investment vehicle. Again, like an HSA, ESA, IRA, 401k, SEP IRA, we've got them all here at NuView. So wherever you're coming from, whatever your situation is, there's a tax sheltered investment vehicle for you. And one of those things that they can be invested in is notes, which is what we'll be covering today. Now, like I said, I already listed off all these types of accounts. You got your personal plans, employer plans if you happen to be self-employed, as well as specialty plans, which are like your use now plans. You don't have to wait until retirement age to start experiencing the tax benefits of the specialty plans like the health savings account and the education savings account. Now we're talking about notes today, but what can you invest in as a whole? Well, it can be a whole lot of different things. When it comes down to it, your IRA, it's only allowed to not invest in two things, and that's life insurance contracts and collectibles. But anything else under the sun, if you can put a title to it, your IRA could technically be an owner of it. Now, like I said, today we're talking about notes, and notes themselves. You only see two different ways notes are, structured here, and it's secured or unsecured. But don't let that fool you, because notes are very, very cool investments because of how you can structure them with your borrower. Are you going to have points? Are there going to be any balloon payments? What are the terms and the interest? You can negotiate all of that with your borrower. So notes have the potential to be a very, very creative investment opportunity. Okay. Now, as a disclaimer, we at NuView, we're self-directed IRA custodians. So what that means is we don't provide tax, legal, or investment advice. We don't sell investments, right? We provide to you the tax sheltered investment vehicles, your IRAs, 401ks, HSAs, or ESAs. But when it comes down to what those accounts are actually invested in, doing the due diligence on the investments and actually guiding that tax sheltered investment vehicle to growth, it is entirely self-directed, and we mean it. We don't give investment advice, tax or legal advice. We can tell you what the rules are, make sure that you're staying in the lanes of the rules and regulations that the IRS puts forth. But if you follow it or not, that's self-directed. So like I said, self-directed accounts, NuView, we don't provide tax, legal, or financial advice. So without further ado, I do want to introduce David Masi and Kevin Shortle. They're both note investors. And like I mentioned previously, they've done a lot of great research on the real estate market, on the note market, and they've got a really great presentation for us here today. David and Kevin, like I've said in previous webinars, I'm not the investment expert. I know the IRA stuff really, really well. So I'm really looking forward to hear what you guys have to say, because note investing is definitely something that I'm interested in, want to be more involved with. So without further ado, guys, thank you for coming on today, and I'll let you take it away from there.
Great. Thanks, Alex.
Thank you. Thank you for having us on. We do, definitely appreciate the opportunity to share our information with everyone. So, but before we get started, I do want to give you guys really quickly a small background about me and really share our goal of why we put this presentation together. Now, there is a lot of information for us to cover to get out to everybody, so I'll kind of go through that fairly quickly. So to start it off, it's for those who don't know me, my name is David Massey. I am a full-time analyst. My educational background is I have a double degree in finance and accounting with a concentration in commercial real estate investments. My real estate career actually started in 2004 as a loan officer, which was great for me. I got to learn all the different processes. I got to learn all the different qualification requirements in banking in order for someone to qualify to purchase or refinance a home, which for a lot of us, that's something we encounter at some point in our life. For me, that's what gave me the real estate bug, and it kind of stuck with me ever since. Now, since 2004, I've seen a lot of different changes in the marketplace. I've worked through them all. I got to see the good and bad, the rise and crash, the ups and downs, as everyone would say. And I do that through various roles and projects and property types. I've worked on everything from single family residence all the way to commercial investment properties such as office space, industrial, and multifamily apartment complexes. So I am an active investor, and I do have experience in property acquisition, property management, and note investing. I do own both performing and non-performing loans at this point. And that's something that we're going to touch on in the case studies today. So that's the real quick, short version about me, so we don't run over time. But to kind of get to our presentation, our goals, we really have two goals that we kind of set out for this presentation. The first of which is, what does a deal really look like? When you talk about a note space, what does a deal look like? And then the second goal that we want to kind of give you guys information about is the new government assistance program that's out there today. That's really, is going to have a big impact on the note space and also homeowners as well. So a few months ago, I was able to attend a NuView event, and I got the chance to talk to some of the attendees and some of the team members. And surprisingly enough, pretty much the feedback I got is people had the same questions that I had when I first started in note space, which is basically, what does a deal look like? When you're deciding, is this for me or not? Is this, how do I invest or not? I think at this point, everyone or a lot of people really have a really good concept what real estate investment is. They have a good understanding of what note investing is. Like Alex said, it's become popular. It's grown to the point where note investing is its own asset class. And that is something important to point out, because you do need to treat that a little bit differently. Coming from, all the different, areas and experiences that I've been exposed to, when I first got into note space, I first thought, hey, I was a loan officer. This should be a piece of cake. Well, I had a lot to go through and a lot to learn over that process. So it is treated separately, slightly differently than just general and real estate investment. So when you're trying to answer that question is, do I want to invest in this? Should I use either personal or IRA money to invest in this? Should I do it myself, or should I work with a professional? It really comes down to, what does a real deal look like, to kind of give you that answer of, is this something for me or not? So I've worked with Kevin over the past few years, kind of going through the analytics of looking at the ins and outs of deals and saying, is this one good? Is this one bad? Let's go through it and kind of look and see why we want to accept this one or pass on a different one, to kind of answer that question, to go through what good deals are, how we establish them. So without further ado, I'm going to kind of turn it over to Kevin, and we're going to cover the case studies. and kind of cover those two goals of what a successful deal looks like, and also the new assistant program at the same time.
Thanks, David. Hello, everybody. I hope you're having a good day today. Thanks for joining us. I do appreciate it. And we've got a lot to share. I'm not going to read this whole slide to you. That's what I put together for people looking for a bigger bio on me. So let me simplify this. I've been in the industry investing in notes for 30 years now. And it's funny when you get a little bit older, like I am, you start to time things by certain days and certain dates. Well, it just so happens today is my 31st wedding anniversary. So I've been married 31 years today. And unfortunately, I'm not home. I am in St. Louis. I had a presentation to do last night. I've got another one to do out here on Sunday. But my wife and I have been together 31 years, and I started in this about 1 year after we got married. And it's been a great journey with her, and investing in real estate, investing in notes, and passing that along to our son as well. So this will be shorter, easier for you to read here. As an industry expert, I've really trained really more people than anyone in the industry, and at a very high level, because it is important to invest in these assets and do it safely first, and then worry about returns secondly, because we can always increase our returns through various techniques. So in this, it's going to be different. If you've ever seen me before, we're going to focus just on two things, on what we call turnkey notes, which are very passive, easy notes to purchase. They're perfect for your self-directed accounts because they're normally just going to be hands-free. You simply invest in them, and the money comes into your account by way of a servicing company, and you're all set. You normally don't have to hassle with anything from that. And then the other information towards the end that we're going to give you, so make sure you stay towards the end here, because we're going to talk about this new program, as David just briefly mentioned, but I'm talking brand new. This program has only been active it's about all states right now within less than a month. I've been talking about it through my clients. Like David is a client of mine. He enrolled as a student of mine, and I like to call my students clients. And I've been talking to them about these programs here, and it's really something that is a huge game changer in this industry. The returns are going to be absolutely phenomenal, yet it's not on anybody's radar screen. I'm one of the things I'm known for is my research in the marketplace and studying the marketplace and seeing what's going on. So let's jump right in. I'm going to slow things down just a little bit, because we probably I can't assume that everybody knows what a note is and how it works. So let's just start there from the very basics. If you already know what a note is, just bear with us. Let me make sure we get everybody on the same page here. So investing in real estate backed notes is very different than investing in real property. When we buy in real estate notes, the property is simply our collateral. We don't own it. We act as the bank. It's just the collateral. Being it's our collateral, though, it's important for us to understand and know what the value of that asset is, because if things go horribly wrong, we're going to end up with that property. So if we buy a note and we're okay with ending up with a property, if that's our worst case scenario and we're still making money, you know that you've effectively reduced and or eliminated your risk in these investments here. So how do we do that? Well, we buy an IOU, we buy a promissory note, and that's all a note is. A note simply establishes, here's how much you are borrowing or have borrowed. Here's the interest rate. Here's what the payments are. Here's when the payments are due. Here's what the late payment is. Here's where you send the payment. It has all of the details about the debt itself. A note, as Alex mentioned, just by itself is unsecured. If you lend money to a friend and they promise to pay you back, great, you've got a note. But what if they break their promise, even though the promise is in writing? Well, you do have some legal, but you're going to have to take them to court and get a judgment, try to get that money back, because getting a judgment doesn't mean that you get any money. It means you get a judgment. Now, the second part is to collect. So we don't buy those types of notes. Well, we focus on our notes that are secured, and they're secured through a security agreement, which is typically a mortgage or a deed of trust. Now, there's a third one involved there, but we don't have time to get too deep down the road in that, but just think in terms of there's a security agreement here that somebody is also going to assign that attaches to that note. And the security agreement basically says, if I don't pay you back as a borrower, if I don't pay you back according to the terms of the note, then you have the right to foreclose on the property, either judicially or non-judicially, depending upon the state. That's it. So once again, it comes back to understanding what we're investing for the asset, what's the price, if you will, but what's the value of the collateral that we are looking at, because again, if things go wrong, we may end up with the property. And by the way, that only happens a very small percentage of the time in this industry, because there's a lot of other things that we can do to prevent it from going to a foreclosure. But at the end of the day, we always have smart investors, no matter what you're investing in. You're hoping for best case scenario and doing what? Preparing for worst. And that's a valuable lesson no matter what you're doing. So the note business really is about the cash flow business. It's investing your money and getting cash flow coming back. Now, in addition, we can get lump sums. We're going to talk about that towards the end of this as well. But for the most part, a basic model as a note investor is you're acting as the bank. You're simply receiving monthly passive income, and it's backed by the property. So you do all of that without having to worry about tenants and management and the maintenance and all the headaches that you hear. I work with a lot of frustrated landlords. And I'm not saying being a landlord is a bad thing by any stretch of the imagination. It's a great wealth builder. And of course, you can do it through your IRAs as well. But at some point, you end up having some landlords that go through just enough experiences where they say, you know what, I don't want the hassle of that anymore. Is there a way I can get a cash flow type of business without those? And the answer is yes. It's right there in the real estate realm. It's real estate notes. So obviously you can do that within or outside of your IRAs, 401ks, Coverdale accounts, all the various accounts that NuView has for you. You can invest with all of those. We do have normally a third party involved here, which is known as a servicing company. So when you purchase these notes, you will typically board the loan with a servicing company that will collect the monthly payments. They'll take out a small fee. We're talking $15 to $30 per month. They'll hold escrow if that applies. They'll make sure the taxes and insurance are paid. They'll follow up with late notices if people pay late, and they just send you your money automatically. And you can log right into your account, see where everything is. So it's a wonderful service. And that's what we really mean by passive notes. Now, the type of notes that we look at here can be turnkey notes, which are very simple. We're also going to talk about a coming little wave here of inventory known as semi-performing notes. And these are notes where people have possibly struggled in the past. They're now making payments. Maybe they're skipping a month here and there, but they need some help. And one of the things that you'll find in this business is you can be very well compensated if you're a problem solver. And right now, with the economy the way it is, with the direction that we're heading with inflation, people are going to be struggling to be able to make their mortgage payments, pay their rent, those sorts of things. We just know that is coming here. And as a note investor, you can absolutely do this, because not only is this an investment, it's also a form of a business where we're helping people stay in their homes. And I really love this quote by Robert Kiyosaki. Whether you subscribe to his philosophy on wealth or not, I think it rings true to everybody. If you read that, it says, to obtain financial freedom, one must be either a business owner or an investor or both, generating passive income, particularly on a monthly basis. And that's what gives you that freedom to do what you want to do when you want to do it, and the attitude to enjoy it. And this part of the industry can certainly do that for you. So we can break notes into two categories, essentially performing and non-performing. Our focus, as we've said, is going to be on the performing notes here, and specifically notes that can provide passive income. And David, we put one of yours on here. So why don't you go ahead and describe to them how we found this, how we worked on going through the due diligence, and what the results have been so far.
Yeah, absolutely. So this one, we found it's what's known on a trading platform. There are a variety of ways to find different notes. This is where I particularly found that one, was on a trading platform site. Basically contacted the note owner and kind of said, hey, send us the information to do the due diligence. And, they'll send a whole complete due diligence file. And then from there, we do the research of, does everything that they're saying match? What's the story behind this particular deal? And as Kevin will tell you, there's two big things that you want to look at. One is the analytics, which is your risk, and the other is the story behind what's going on with this particular property. For us, for this one, it was supposed to be a kind of a quick turnaround. because when we first evaluated this property, it looked like they were in the process of renovation, and it kind of had everything showing the signs of, oh, this homeowner is probably going to sell in 3 to 6 months, because as you can see in the picture there's some contractor labels on the window saying, hey, we're starting to renovate this property, and we got further pictures as the inside is going through kind of a rehab, but the overall evaluation on this, we purchased this note, or our initial offer was for $35,000, and throughout negotiation we got it down to $32,000 on this note for this mortgage. There were 223 payments remaining when we took this note over, and those payments were paying us $408.09 every single month. Now, if this goes through to the whole remaining 223 payments, we're going to get an annualized return of 14.19%. If they do sell, which they haven't yet, it's been over that 6-month period now, which we thought they were going to sell. They haven't sold yet, but if they do, our return is going to be that much better, because we are able to buy these notes on a discount. So they had a little bit more than $32,000 that is remaining in as far as value or payments left on a note. So that's in a short version of this particular property. It's a performing note. They're paying on time. They're still in the property. Everything's going along smoothly.
Yeah. And I know when people see that picture, they probably initial reaction was, ooh, I got to buy stuff like this. Now there's notes across the board. There's commercial notes. I had one I was talking about before, the $600,000 notes. So they're all over the spectrum, but there is a sweet spot in this business, and you can see it here. When we talked about some of these concepts earlier about risk, look at the risk on this. I mean, the house is worth about $100,000 and David's in it for 32. If things go wrong, even if property values come down, is he still safe? And the answer is, of course, yes. I mean, this property could drop down to $80,000 and he's still safe. He's got $32,000 in it. The payer on this one hasn't missed a beat, and they had a good track record. So he knew all of this going in, because we went through the documentation. And I know David's heard me say this all the time as we're going through deals, but I really take the idea of, I want to know more about this note than the note seller possibly does. So we really researched those. So he knew going in, it's getting some work done. I'm going to come down on the price on this one. It'll probably pay off soon. If it doesn't, I'm fine. I'll keep it longer term. If it does pay off early, we're making a greater return. And, again, if things were to go horribly wrong and he had to take the property back, he'd be fine. He'd probably get cashed out at a sale. This person wouldn't go into foreclosure, right? They'd turn around and sell the house for 90 grand if they had to, and they'll get paid off. So very, very safe investment, money coming right back in. It can be outside of that as well. And of course, you'll pay taxes on that if it's outside of it, but very safe and very, very high yielding investment here. All right. Great one there. And that was one of your first ones, or your first note, David?
No, this was a little farther down the line. So we previous notes before this, but this is a really good example of not only just a performing note, but one that kind of, exactly like you mentioned, it gets overlooked because people see the outside and go, ooh, what's going on there? And it turns out the story behind it was just a little bit of rehabbing. They were preparing to sell, and they ultimately, it looks like they decided to stay in the property. And again, current value, or the value at that time, was over 100,000. We're paying 32. So, we moved forward on that.
Yeah. And the money just comes into your account very passively. That's the kind of stuff we're looking for in a turnkey note. Generally, in a turnkey note, I like to see 30% equity in the property, which we have there. And I also like to see about 2 years of seasoning, or a payment history of 2 years, if you will. And those are the two factors that make it turnkey, because typical patterns is 2 years worth of payment history. They're going to continue to pay unless something major happens. So it fit the bill for exactly what we're talking about here. This one did as well. This property is down in Florida. And this one popped up, and I just knew this was going to be a great deal for somebody. Typical model. This property was in foreclosure. It was purchased by a real estate investor. The real estate investor then sold this property as is to a business owner. That's how it kind of worked out. The guy owned a business there locally. He wanted to convert this single family home to an office. So the zoning was changed and everything else. And he just sold it as is because the business owner didn't want him to do any changes and make it like a house. He wanted it so he could make it into an office place. So it worked out really well for them on that. And he sold it for $50,000 and no, 60,000 because he took 15 grand. He took $15,000 down. So he sold it for $60,000, got $15,000 down and created a seller finance note. More and more real estate investors are doing this, by the way. And I've got the numbers and the stats on everything that came out. Seller financing is likely to continue to grow because interest rates are going up, inflation, affordability, all these sorts of other issues we don't have time to get into. But this is a classic deal of good down payment on a $60,000 sale, $45,000 note. But a lot of time these real estate investors don't want to keep that note for the long term. So we build networks with these folks. We have ways of contacting those folks and vice versa and building relationships. So once again, we went through all the documentation on this one, including the settlement statement to verify what they're telling us, $15,000 down, and there it is. We've got the mortgage, we've got the note, we looked through all of those items, and it's not that difficult to do. You request the documents or you look online, you research them, you're verifying all of the information. All of that looked good. This one fit the classic bill. The only little stumbling block on this one was that they were self-servicing this note. The real estate investor who created the note, they were self-servicing it, but they were collecting payments through PayPal. So instead of having a verifiable through a third-party licensed servicing company, we said, send us the PayPal history. And we went through that and it looked very good. So we went ahead and I advised my client to go ahead and buy this one. And what he bought on this one was 14 payments have been made. So out of a total of 36 payments. And he's got a balloon here on this one, which is a lump sum payoff coming up after the 14 payments that are remaining. So 36 payments originally, my apologies, 14 payments when my client, my student bought this note, 14 payments left plus the balloon of $20,915. And he got that for $20,000. So very passive. The payments are automatically debited from the borrower into his account every month. Everything's been paid on the first of the month. The only time it hasn't if it's on a weekend, right? Otherwise, it's been on-time payments, which is, again, that passive stuff. So how do you identify good deals? Again, you're looking for the proper amount of equity. You're looking for the proper amount of seasoning within that, and you do some projections on what your numbers will be. So he's going to make a great return on this one. Some of you might be thinking, well, what if the person doesn't come up with the balloon payment on this one? No problem. We've already thought that through. We can push the balloon back and just continue to receive the income. Right? There's a lot of different solutions that we can do. We could redo a whole new loan. We could have them pay and maybe he can't pay the full 20,000, but he can pay 5, and then we'll readjust the loan. Ton of things that we can do. This has been a perfect payer from the get-go on a turnkey note. Now, with some of these turnkey notes, I mentioned earlier that you can increase your returns as if these weren't good enough, but there are times when you're going to want to recapitalize. So if you're utilizing your IRA 401k and you're buying some notes and now you're getting that passive monthly income, every once in a while you're going to say, you know what, I really wish I had some more capital that I could buy other notes with. Well, how do you do that? Well, you could sell the note that you have or the notes that you have in full. Or what you're going to find is probably a better solution in almost all cases is sell just part of that income stream that you own. So for example, this was a note on a duplex here. So in a duplex, you've got 2 people, on each side renting the place. And when we ran the numbers, one person could move out and there was still enough money coming in so that they could afford to pay the debt service, right? So the landlord investor, the real estate investor, owns this duplex, receiving rent, and then paying the debt service, which is the note. Okay. So all that's working very, very well. And by the way, if rent doesn't come in, the landlord still has to pay the note. They're the borrower. So BPO came in at 50,000. clear title, all the property taxes are paid. Unpaid balance here, that's the remaining balance of the loan, 63,000, 7.9%, 224 payments remaining, 540 a month. You can see the numbers there. He bought all of that for $42,000, backed by that property. Okay, so a little bit higher as to what the value is, because the BPO said 50,000. So he's in it for a little bit higher, but the thought process was, but we've got strong tenants in there. They've got signed leases. They're paying rent. The rent is much higher. Each side was being rented for more than $540 a month. So he had plenty of money coming in and felt strong about that. And we said, let's go for it here on this one. So he bought this note for $42,000, collected 4 payments. After he collected the 4 payments, he had some other investors that were starting to go, well, what are you doing? How do these notes work? That's been happening, quite a bit, and it'll happen to you too when you get involved in this, and they want to get involved in it. So he went to one of those other people and he said, look, I've got a note here that I purchased it. I'm already received 4 payments. They're paying on time, everything else. And I'm willing to work with you on this one, where I'll sell you the next 100 payments for $42,000. Now, obviously, he paid $42,000 for all 224 payments. He's cutting off, it's probably easier to visualize a timeline, I guess, 224 payments, and he just carved off 100 of them and sold them to this other investor for $42,000. Now, this other investor is still making a good yield. It's just this concept of time value of money that comes into play here. But think if you own this note, you invested $42,000, you got 4 payments back. So you got a couple $1,000 back on it, and now you're selling 100 payments for $42,000. You've got all that capital again to do what? Buy another note. What will happen though, after this new investor, the partial investor gets their 100th payment, the payments come back to you, your IRA. Okay. Or there's an early payoff, you have an entitlement, and this investor has an entitlement. Either way, you win. And in fact, on this one, the note paid off 9 months later. The investor got all of their principal back, 9 months of payments. They were happy. They want to do it again. The original note owner, the person I trained in this, he received the payoff, another $21,000. Okay, so he collected $24,000 on this deal and had no money in it because he got his money back on the partial. No, I know that's, if you've heard about partials for the first time, that's probably a lot to digest, but it's a very powerful concept. Just think in terms of linear, where you get all these payments. I can sell you 5 years worth of payments. I could sell you 7 years worth of payments, any number of payments. Now, non-performing notes, we're not going to spend too much time on the background on these, but we do have a problem here, and you're compensated very well in this business when you have a solution to this. We have right now 2.1 million people that are struggling here. Okay, they're coming off of these forbearance plans and everything else, and I have a lot of statistics on this. That's a big number, and a lot of these people are going to need help, and banks are not in a position, personnel wise, they're not in a position financially because of penalties and such, to really help a lot of these folks. They'll help some, but they're not going to be able to help everybody. And those people's notes are going to be sold, and they're going to be purchased like investors like myself, David, and you, who get involved in these type of assets here. In the pool, I know there's a lot to look at here. I'm just going to point you to 2 numbers here. There's 2.1 million people which loans are not current, and it's a much bigger pool than the foreclosures, by the way. We only have 138,000 foreclosures nationwide going on, and this is the latest data here. You can see the dates on that. So pretty interesting when you only have 3,972 foreclosure starts, and this number was from October 2021. Now it's increased a little bit. In fact, last month, the newest data was 25,000 foreclosures, but even 25,000 foreclosed property starts nationwide is nothing. Much more opportunity in this side of things. There's the numbers. It's hard to argue with here. So here's the big thing that's right now. This is a brand new program. like I said, only been around about a month. Nobody knows about this thing. I've been researching this. I've been anticipating this for a good 8 months, and it came to fruition, and I knew it was coming. And what the government has done is they have allocated $10 billion. They've given that money to every state, not 10 billion every state, 10 billion split amongst all of the states, saying this: we need to help people stay in their homes. We had COVID, we had this, we had that. We're going to put this money aside, and you need to come up with a state-run plan to help these people pay their loans. Okay. Homeowner Assistance Fund is the name of this program. And I took a screenshot here, the department, U.S. Department of Treasury, that funded this program. So I want to show you this. This is right from the Treasury Department's website. You can look that up, and they outline what this plan is. They tell the states you have to submit a state plan on how you're going to help people. We shall then approve that, and then you can start the plan. Every state except for about 4 or 5 right now have their plans approved as of last week. I couldn't say that 2 weeks ago. So as of last week, every state except for a handful of them have plans active and ready to go. The big issue: the very people who need the money, the struggling borrowers, don't know about it. And that happens so often in these type of plans. So this is where note investors like you and I, when the banks say we can't help these folks and sell these non-performing loans, they trickle down to us. We buy these loans. We're going to reach out by way of a third party or possibly our own efforts to these folks and say, hey, there's a government program that will help you. Let me show you how this works. And that's just a page that shows all the various states. I'm going to skip through, I think, this one for the sake of time and just put it, this is a real deal that we're working on, but there's more to it. Let me jump to a cleaner example for you here to show you how this plan is really going to work, so it's easier to conceptualize here. So let's say you've got a property that's worth $100,000. They still owe 200 payments. They have an unpaid balance, right? The principal amount that they owe is $30,000, but they struggled for a period of time. They owe property taxes and they have unpaid monthly mortgage payments to the tune of $25,000. That's called an arrearage account. So if somebody's in a position where they struggled, they lost a job, their hours were cut or what have you, and time goes by, all of those payments that they're not making start to accrue, and penalties apply and interest applies to all of that. That number continues to grow, even if they start making their monthly payments again. It's a problem. And loans have an acceleration clause where you could demand payment in full. So they're in trouble here. So we buy this note knowing that scenario, and we say we can help you. So in a note like this, being it's non-performing, you may come in and buy this for $20,000. They owe 30 plus an arrearage account, unpaid balance is 30 plus the 25 from the past, 200 payments in the future. We're buying that note for $20,000. It's backed by a house worth 100. Very safe. We know it's a problem. That's why we're getting a further discount on this one. Okay, then this is located in Alabama here. You're going to encourage these people to apply for this assistance. They can do it right online. They can call, they can make a phone call if they don't have the ability to get online to apply for this assistance. There's basically 4 documents that they have to supply to show that they have struggled. Okay, that's really all that this is about. The approval process can take up to 90 days. Okay, so let's say 90 days later, you reached out to these folks. Maybe you sent a direct mail piece to them. Maybe you sent a door knocker out to them. Maybe your third-party servicing company is making phone calls to them about this program. Either way, you're reaching out to let these folks know that there is a state-sponsored program that they can apply for. It's free to apply. And if they've been struggling, it's going to be easy to qualify for. So 90 days later, they get approved. The state will say, we'll pay $20,000 to the county for the property taxes. So that's money that they don't have to pay. And by the way, property taxes are important in the note business because they are the most senior lien. They could jump in front of us. So if the property taxes continue to not be paid, we, the note holders, may have to pay that before it could go to a tax foreclosure sale because they're jumping to the front in front of us. So it is something that we look at. In this case, you wouldn't have to pay that. They wouldn't have to pay that because the state is paying the county property taxes. Great. That's issue number one. Secondly, though, they still owe us money on that loan. They still owe us more. So what happens next? Well, the state then is going to pay us $25,000. Okay, so it doesn't matter what you paid for the loan. You paid $20,000 for the loan, but the state's going to pay that $25,000 of that arrearage account to us to catch them up on their loan. Think about that. What just happened to your IRA, your 401k? I mean, you invested $20,000, you got $25,000 back. Okay, and it gets even better. They may look at this case and say, we think these folks are still going to struggle. They're still not working full time or whatever the case is. And the state may even say, we'll not only catch them up, but we're going to pay the next 12 months of their mortgage payments directly to the note holder. So if the note holder is your IRA, 401k, that money's going direct into that through NuView as well. Incredible, right? I mean, you've got essentially at this point, you have no money in this deal. And guess what? You still have payments left. So there's 200 original payments. The state just paid 12. That leaves you with 188 payments after the state pays the next 12 months. That's this new program that is available. And that's why I'm saying this is a complete game changer that for some reason has not been on people's radar screens at all, with the exception of people that I teach and train and some of the groups that I've spoken to. Because David, you've heard me talking about this program for months on end at this point, right?
Absolutely, and we're looking at them ourselves. So.
Yeah, it's going to be a game changer there. So I put our information if you want to talk to us, or you can do it through my schedule or that sort of thing, and we'd love to talk to you about it. But in the meantime, Alex or Grace, you have questions there that we can help people with?
Yes, we do. Yes, we do. We've got one from Raphael here. Do you check buyers' credit? I'm assuming they mean borrowers' credit at any point in this process.
No, we don't. If you are originating a loan, you might run their credit. What's more important for us on both the origination, well, on the origination side, if you're creating a loan, is do they have the ability to pay? So we look more at the income statements and balance sheets than we do credit, because we already by default know if they could get a bank loan, well, go get a bank loan, right? Mm-hmm. If they can't, they look for seller financing. So we kind of go in knowing the credit's not perfect. You could just look at the income statements and do it based upon that, but you also in that capacity could pull credit, and sometimes you'll do that. Depends upon your individual risk tolerance. If you're buying a note that's already been created, what's really more important is, are they making the payments? What's their payment pattern? It becomes much more important than looking at their credit. I mean, somebody could have a 580 credit score, but if they're making their payments every month for months on, or for 2 years, I really don't care what their score is.
Yeah, no, and that kind of touches on the creativity, that you can use approaching note investing, especially with unperforming notes, as well as you've got the flexibility to structure it kind of how you want, and kind of make it a win-win for all parties involved, which is really cool. And it's one of the great things about self-directed IRAs is, there's also that community building aspect to it as well. You might be helping a family of 4, family of 5, some kids running around, be able to stay in a home, a childhood home that they've had for 10 years. And that makes my heart feel good, a whole lot better than investing in like Coca-Cola stock or, something that's just a piece of paper, and you don't really get to see the effects of your money and the good that it can do in the community, which I think is really, really cool. And next question that we had here, was from Raj. Raj, do you have a notes fund where we can invest passively? So do you guys actually accept investors with your group, or is it just like education that you guys do?
There are funds out there that you can invest in, but you're not going to get the same type of returns that you could get investing individually. So there are cases where we will partner with people, and David has done that himself, and he's also looking for other partners. So David, maybe you can speak to that a little bit.
Yeah. So the answer to the question is yes, we do accept investors, and we kind of work through, what their risk tolerance is, what kind of goals they have, and we work together to find the right, so to speak, deal for them, and also to grow the business as well. But like Kevin said, as far as different actual portfolio like funds, no, we don't currently have that. And there are, other big, huge, funds out there. Don't get that one-on-one kind of attention like you would in a partnership like that we do. So
yeah. No, and it sounds too like, you don't have that same level of flexibility or creativity with them either. You're beholden to whatever the fund's doing and however they're structuring their notes. You don't really work with the individual, or possibly, maybe you don't even have the opportunity to buy notes at a discount. Maybe the fund is originating the notes. So there's those aspects of it where you can, arguably put yourself in a better position from an investment standpoint that you might not be able to get if you invest through a fund.
Yeah, liquidity,
absolutely.
Yeah, liquidity. If you invest in a fund, sometimes you're locked into that fund. And again, there's nothing wrong with funds; they're just different, right? But if you invest in a fund, your money's normally locked in there for at least a year. Where if you're investing in individual notes, you're right. That's where the creativity and things can happen more fluidly.
Cool.
Yeah, and if that is something that people want, like Haven said, yes, we are accepting investors if people do want to, explore this avenue and invest in notes. That is something that I definitely do, that we both definitely do. So we're open to having that conversation.
Cool. Yeah. And just as a reminder to everyone watching, having people come on NuView's webinar and present doesn't mean that we're recommending them as an investment. So just like everything else, you got to do your own due diligence, make sure that whoever you end up working with is people you want to be working with, because at NuView, we're not going to tell you yes or no, that's good or bad. So just always keep that in mind. And as we move into the next questions, we did have one from Anthony. He said, if the government pays you the $25K, assuming for the mortgage assistance program, who pays the actual back taxes? Is that also the government?
Yes. So let me see that one slide there. So I think I put it, they owe $2,000 in taxes, and they have $25,000 in unpaid taxes there. I may have misspoke on that. So the state then would pay out of the total. So a state always has a total. So, some states are 50,000 per household. Some states are 30, some are 20. So it depends upon the state. Alabama is, I think, $40,000 maximum. Okay. So they'll look at the scenario and say, okay, we'll pay 2,000 in taxes. We'll pay 25 over here. That's a total of 27. We're going to pay their 12 months of payment. So we can add that number in there. And is that under the state maximum threshold? So the state is going to do that, and they'll pay that directly. So the state, there's a company within the state that, that does this, facilitates this, and they'll send the money direct. So they don't send it to the borrower saying, hey, don't forget to send that 25,000 to the note owner. They send it right to the note owner's account. They pay the county property taxes directly. So all of that comes out of their funds.
Cool. And as I understood too, it's just up to whatever that threshold is for
whatever
that individual state.
Whatever the state maximum is. And that's what they have to submit for approval. So I think, for example, Michigan's 25,000.
Okay.
Cool. and other states go upwards of 50,000.
Okay. Very good. And got another one. Got a lot of questions, guys. If you still have any more, please feel free to keep throwing them in the chat. We'll probably go up until 2:00, and then anything additional, I'll make sure to provide that over to Kevin and David, see if there's something, they might be able to answer. If it's anything we can answer, happy to answer it as well. Deborah asked, where do you find notes to buy? What you're actually investing in, where do you actually source these opportunities?
Yeah, step number one, and that's a common question as you would think, where do we find them? And we really have to think about not only find them, but how do we determine if they're good deals? I mean, that's really what our focus is, because finding notes is not that difficult. You can go to various sources that sell notes. Our friends over at Revolve Capital. You can go to online trading platforms. I mean, notes are out there, but you also want to make sure that you know the process of determining what are good notes and good sellers and potentially bad sellers, because unfortunately you do have those. We have something in the industry we call tails, and tails in our industry are notes that everybody else has passed on. Now you get to take a look at it, sort of thing. So we got to watch out for those, and that happens in in real estate and other things as well. So there's online trading platforms that you can go to. There are companies that actively buy notes at one price, and they buy them in bulk. So they might buy $100 million worth of notes, and then they'll mark them up and sell them directly. There's servicing companies that do that. And you simply register with them, which is free, and they'll either email you spreadsheets and those sort of things. And then you have to go through and do your own due diligence. So
Right.
Inventory is really not an issue in the note business today. As we said, it's really become its own niche. So they're out there, just a variety of sellers, a variety of ways that they sell, and a variety of notes.
Okay. And anything off the top of your head that you might think of as kind of like at least a first question to ask yourself when judging whether or not, these companies or sources might be reputable?
Yeah, you can buy directly from individuals. For example, our friends at PaperStack, I'm sure you guys know PaperStack. They're right down the road from you, as I am, about 20 minutes down the road. And they have a trading platform that people can go and look at notes. And you're buying directly from an individual seller. There's no way you're going to know, well, who is that seller and that sort of thing. You'll be able to converse with them and such, but you won't have the details of how long have they been in the business or anything like that. I suppose you could ask. So you're really evaluating the notes themselves, no matter who you're buying them from. But I think once you get in the industry and understand a little bit, you'll know some players that you just kind of go, I'm not interested in the kind of notes that they have.
Gotcha. Okay. Perfect. Yeah, I've heard of PaperStack before. I know there's a couple other ones out there, and the user interface of them I think is really cool, because it's almost like Netflix, where you just kind of scroll through and you kind of see what you want. There's
a lot of filter options on PaperStack that helps, really allows us to kind of either expand or narrow the type of deals that we're looking for. And they kind of add to what Kevin's saying is yeah, I mean, we kind of went fast through this presentation, but there's still a lot of due diligence work once you identified a note to kind of go through and make sure, is this valid? Is this legitimate? And then at the end of the day, is this right for me? So there's just a lot that we kind of in that process that it's hard to cover step by step on a shorter presentation like this.
Of course. Yeah, gotcha. Do you guys do any notes that are secured by land, or is it always residential, like income producing property?
It can be anything. Land's become real popular fairly recently. Again, single family homes is the most popular. People like rental properties. I know a lot of people would love to buy notes on apartment complexes and stuff like that. Those are harder to find, and they're typically more expensive. But it can be any real estate that has, again, the value. Yeah. Cool.
Awesome. That's all we got for questions today. If anybody's got anything else, feel free to reach out to Kevin or David. If it's something that's maybe not so much note related, maybe more so IRA related, feel free to reach out to me. I'm happy to help answer those for you. I got a couple slides to close out with. Kevin, David, you guys are welcome to hang on, but I just did want to take the opportunities to, say thank you for coming on and speaking to our audience. Notes, they're as passive as can be. When we're talking about alternative investments, they're oftentimes, for that reason, a great fit for self-directed IRAs. So it's a topic that we're always happy to bring on guests, especially ones that go into a lot of detail and creative methods like you guys did today. So just want to say thank you, and hopefully we can have you on again sometime soon.
Great. Sounds good.
Absolutely.
Thank you, everybody.
Thank you for having us.
All right. Very good. So NuView audience, we are wrapping up a promotion for the month of April. We want you to add some color to your nest egg with alternative investments. As we talked about before, there's a level of diversification you can get with self-directed IRAs that you cannot find elsewhere. The promo code itself, what it's going to do is if you open up 2 accounts or more, your application fee will be waived and a $50 fee credit will be applied to all accounts that are opened. And this will be good until the end of the month. So make sure you get those applications to us before or on April 30th of this year. Now, this is our email address. You can send us the application there. If, like I said, if you have any questions following this presentation, feel free to send them our way. This presentation will also be up on our YouTube channel within the next 24 hours. It's already live on our Facebook. So if you do have questions that are specific to note investing that might be good for David or Kevin, feel free to rewatch this presentation and snag their contact information. Otherwise, stay up to date with NuView, right? This QR code here, it'll bring you to our educational resources page on our website, where it's got the entire archive of every weekly workshop that we've done prior, covering real estate, notes, private equity, cryptocurrency, precious metals, and the list goes on and on. So definitely give that a scan, give us some follows on the socials. Like I said, if you got any questions, we're more than happy to hop on the phone and discuss with you. So once again, to Kevin and David, thank you for hanging out and presenting for us today. And NuView audience, we'll see you the same time next week. Thanks.